Hey everyone, this is Michael, and this is the stock picks video for February 6, 2022. Before we start, I just have our disclaimer, and just wanted to say briefly that the content and information in this presentation is provided for educational and informational purposes only, and in no way should be considered investment advice. So what I want to do is go ahead and start and just kind of review the current market environment quickly, and then we're going to go over our current positions, the ready list, and the watch list. This should have been changed, but I'll change it for the next one. So right off the bat, the stock environment risk level, we're still in the red. There's really not a lot of stocks breaking out except for oil and gas stocks. As we're going to see in a minute, many NASDAQ stocks, which is traditionally the stocks we buy, are really just getting hit hard, and many are in just really bad bear markets. So it's a risk-off environment for most stocks except for a couple of sectors. So added all together, it's not really a very good environment to invest in. We've also found that the current best strategy is just to sell into short pops or do shorter term swing trades. This has been really going on for almost a year now, since about February of last year. We started seeing that holding stocks for the long term just really didn't work. You would have your gains and then you'd lose them all. So just doing short-term trades really has been the place to be. And in terms of recommended stock exposure, we're still pretty low. There's just not a lot going on, and the volatility has become higher and higher with a lot of recent moves. So when the risk is high and the return is low, you don't really want to be part of this in any size. So let's go ahead and look just a little bit under the surface. Here we can see in this red box 52-week highs versus 52-week lows. And really for about 2.5 weeks, we're just getting a lot more lows under the surface. So again, just showing that the market's really not conducive to making money at this point. Over here, I didn't put it in the box, but you can see we had a number of growth stocks that had done breakouts and had not failed. In other words, dropped 5 to 8% below their buy price. Just a few weeks ago, I mean, we were at 88 in 84 stocks, which is an extremely high number. We don't even see this sometimes in big bull markets where the market's really just cranking. I used to see about 40 to 50 would be the top. So a lot of these were commodity stocks. They all kind of took off, and then they really just broke down, and the numbers just fell right off a cliff. It's improving a little bit now, but it's a poor environment. So that's just what it is. Another thing I just want to mention, we talked about before in the last video, this is the percentage of NASDAQ stocks above their 200-day moving average. We're still down at 19.22%, under 20%. Those are numbers you usually see in really terrible bear markets. And right now the NASDAQ it's I think down close to 10%, maybe 12. I don't remember exactly what it is. But we're being held up by the mega caps, even though some have had really bad earnings hits. Some have had good earning hits. So we're still kind of holding in there. But if those stocks were to really all go down, we would really see a pretty nasty bear market going on. But we're not there yet. We might see it soon, or we might not. It's very difficult to know what the market's going to do with any trying to predict it. So we don't predict. We just interpret what's going on. And then finally, this is just the top industry groups as of Friday. No surprises. Almost half of them are oil and gas related stocks. We have energy, and we have some chemical stocks, and ship transportation have been the only things that really have been going up, or at least trying to break out into new highs. So that's the state of the market. So let's go ahead and take a look at our first our current holdings, and then the watch and ready list. So let me put it on pause, and we'll come back with the charts. Okay, so let's start with one of our positions. We have two, and this one's Murphy Oil. Of course, it's an oil and gas international exploration and production stock. You can see it's actually broken out into new highs. Let's go to a weekly chart. That was a daily. And you can see this is actually acting one of the best ones of the whole sector. It's already making new highs. It's well past its old high that we had in for the coronavirus crash. Relative strength is 99, which actually shows it's outperforming all but 1%. It's in the 1% club. So really, it doesn't get. We don't have 100. 99 is the highest. Earnings are in sales very strong. You can see up triple digits 4 in a row. Yeah, our sales are over here, up triple digits for and 50% for the other one. Very. This company is really hitting on all cylinders. You can also see our earnings for over here on the left. Our earnings for this year and next year are, we've broken out from just negative numbers to now close to $3 and then over $4 a share for the year. All good numbers. So really there's a lot good going on in this company, and it's being reflected in the stock price. So let's take a look at the other one. Our position is Northern Oil and Gas. This is the weekly chart again. Not as strong, but it's doing well. It hasn't quite broken out. So let's go to the daily. And part of it is that we actually bought this coming out of this lower buy area, not trying to make a new high. And sometimes we do this if we have a pretty decent setup. And we were buying it basically right above this high here. Let's see if I can draw the line in there. Yeah. So we just got it a few days ago. We're just slightly up, I think 0.5%. It seems to be kind of stalled a little here. Sometimes these don't work immediately or don't work at all because you start getting running into the overhead resistance over here. So if I draw another line going all the way back, yeah, you can see whenever the stock has got above this area here, there's still some sellers, people that are wanting to get out. So there's a little bit of resistance up here. So hopefully we'll get some good strength and it'll just bypass all this, because this is really only just a few months ago, and sometimes the closer it is, the more these people who bought here and they're down, they're trying to now get out when at least even when it comes back up to their price. So, but it's acting pretty well, and it was actually set up nicely. Some of these stocks, they just aren't set up. They have too wild trading or something, so we don't try to buy those ones. But this one we did because it was actually looking pretty good. So let's go ahead and go to the ready list. The first one is Synovus Energy. No surprise, another oil and gas stock. This one's acting pretty well too. It's actually broken out to new highs. This is a daily chart. Earnings and sales have been, 3 quarters, all triple digits, really, really strong. We had a little poor close on Friday. A lot of the oil and gas stocks did this. They just kind of closed near their lows. But relative strength is great. If we go to the weekly, it's making new highs. Yeah, this is one of the leaders. The only thing we don't like at this point is that earnings are in a couple days, and we don't want to buy it that close. So we're just kind of holding off watching this one, though it's a little too close, but it is on the ready list. The next one is PTR, which is PetroChina. This one is forming a cup with handle. You can see there's the cup over here. You have a little handle here. This has had some nice tight trading here. You can see a lot of spikes. For the most part have been blue accumulation spikes, so higher volume on up days. So it's all looking pretty good. Relative strength 96, which is good. We've had a nice breakout year. Here I am on the left side. Last year we got above, company was earning $3, $1.95, 4, and then suddenly we broke out to almost 8. So we like to see there was a big turnaround going on last year. It's a big company, 95 billion market cap, so it's a large cap, and it looks pretty good. So we're watching this to break out. I think our buy zone. Well, actually, we have a lower buy zone. We were actually putting it on from this area here. So if you miss it, or it's you could just get it right above the 52.48, call it 52.50 in this area here. So we'll update that if the stock breaks above that. Our current buy range is 50.65 to 52. So yeah, we're trying to get it a little early. Sometimes they work, sometimes they don't. Sometimes they shake you out there, but that's a viable one. And the earnings are not coming up soon. They're coming up in looks like about April 1st, so that's not bad. Methanex. This is a methanol manufacturer. They make formaldehyde and some other acids and chemicals. This one, like the other stock we just looked at, we bought a lower area here, and this one did a nice breakout on Friday. We're not buying a lot these days just because the market is so poor and there's not that much really going up. Though this, of course, in hindsight looks fabulous. Should have bought it right above this area. I think that's where our 48 to 49. So it's still in the buy area, but we'd love to buy it, right around there when it broke above this high. So, but we just don't want to add a lot of exposure at this point in this market. So I think we're at like 20%, 25%, something like that. We'll probably keep it there, even though, but someone that doesn't have any exposure, this could be a nice. It's still in the buy range, and just be careful. Don't want to. If you did buy it though, probably put my stop just right below there. It's probably 4 or 5%. I'd have to calculate it offhand, but reasonable risk to reward. And it looks like the nice volume here too. So it looks like it's going to try to make a new run to highs unless the whole market just pulls it back, which is a possibility. Let's look at the next one is Golar liquid natural gas. It's one of the few areas we saw in the industry groups. This is a transportation shipping company. It's on you can see it's right in the middle of this buy zone here from 1436 to 1508, but it's getting a little volatile. We don't like the fact it tried to break out and it came down. It's a little volatile here. Though it's ready, I'd kind of hold off on it. As you're going to kind of seeing that, there's not a lot of really crisp buy areas going on. There's a lot of volatility and, some flaws in some of the charts. That's just what we're seeing these currently, So we're trying to find the best of the worst. And so this one, not ideal. We don't like this volatility, but it is in buy range, and we'll hold on to that one. So last one is Philip Morris. I do own this in my own personal account. I bought it a few days ago. Then we put it on the list. Hasn't really done anything. It's also wedging up, which means just kind of creeping its way up into the bottom of this buy zone. It's looking pretty good. I mean, we like the shakeout here. They formed a cup, then the handle formed when it kind of just plunged and immediately came right back up, shook out a bunch of people that were kind of the weak holders. And we're just floating there. The only thing is earnings are in 4 days, so we'll just have to keep watching this one. Personally, if it doesn't really make any kind of move and I have no cushion, I'll probably exit before earnings. I'm not going to, in this market where we're just getting pretty severe moves either way, I don't want to take the risk. So I'll probably get out of that one if it doesn't if it doesn't make a move before then. So let's go ahead and go to our watch list. It goes a little faster. Ranger Oil, another oil and gas. This one is still forming a base. It tried to break out a little bit here, but it was pulled back by the market. And what we'd like to see is that it is a nice looking base. We want to see if we can, trade a little bit right around here near its old highs, and not a lot of volatility, and then try to break out. That way we know that a lot of the sellers that have been lurking around this area, whenever it gets up here, we kind of head down, they'll be gone. So we'll continue to watch that one. It looks pretty good. Next one is Global Ship Lease. I think we were in this earlier in the year. This one did break out. It kind of sold off a bit and then went ripping on high volume, so not a good sign, and then came ripping right back into the buy zone. And then it's come down a bit. We want to see this one kind of tighten up a little bit and not be so volatile. We don't like to buy stocks that have just come straight up off a bottom. Your risk of just the pullback is high, and they usually don't work out as well. We also don't like the fact that we've had 3 days of high volume right after 3 days of strong volume. So it's on the watch list. It's a little too volatile to be something that we really entertain yet, but we'll see if it can quiet down and give us a better buy spot. Robert Half, they're a staffing services company. This one, it's not quite ready yet. It's the same kind of thing. It looks like it's still forming the base, forming this right side, and we'd like to see it kind of come up near this 120.83 area and just kind of calm down there, not have a lot of high volatility sell-off days, and then try to make a breakout. So we're going to watch that one also. Just a few more. We have Stifel Financial, brokerage and trading investment account company. This is doing what I've been talking about first of all, we have the RS blue dot, which is showing that the relative strength is making a new high before the price is, and it's a very bullish development. In fact, if we go to the weekly chart, we have it here also. So you can see that stock's been in kind of a trading range for a while, and it looks like it's now trying to break out, or it's going to attempt to break out above into new highs. And that's giving us a tip off that is outperforming the market. So, but this one you can see it came down, had this correction from the bottom of the base, tried to come up again, sold off, even undercut it, which was a good sign, and then came ripping right back, shook out all these other weak holders that bought it up here and got rid of them. And now we're kind of just trading tightly right below the price, the old high, and that's a good sign, especially with this. It breaks out here, we may try to buy it. Again, we don't want to have a lot of exposure in this market. It's just not a market that's conducive to making money. So, but in a better market, this looks like it's setting up really, really nice. So we'll see. Just a few more. Baker Hughes, another oil and gas machinery company. It's gotten a little volatile here near the old highs. We want to see this, just like the other ones we've been talking about, kind of calm down. We don't want to buy into a lot of volatility. CenterPoint Energy, you had oh, this is utility. Interesting. This one's come back up again, right up near its old high. There's the buy zone in the blue. And it's just kind of hovering around there. It's nothing wrong. It got supported its 50-day moving average, which is this red line. And we want to see maybe it can just continue to tighten up around here, and then try to make a breakout. Relative strength is not fantastic. In a poor market like this, you really want it in the upper 90s. But it is acting pretty well, and it doesn't have super volatility. And then the final one, interesting, is a completely different area. This is a women's and men's accessory footwear and apparel company, and we haven't seen any stocks like this, traditional growth stocks, in a long time. So this kind of stands out by itself. Relative strength is not fantastic, and it's kind of leveled off, but the stock has also been kind of hovering around and gets up to the upper 60s, sells off, come back, sold off, and we can ripping back on earnings. So that's a good sign. If we go to the weekly chart, it's just been kind of building a base on top of a base and another base and another base. Not a lot of movement going on. We don't really want to buy that because it's not really doing anything. This is where you want to get, where you buy it out of a base and it rips higher, and you get a 50% move in just a few weeks. That's the kind of move we all want to get. This one is not giving us the signs that it really wants to head much higher in a lot, but it is a growth stock, or at least it's in the right area, so we're going to keep our eye on it. But we're not ready to buy it. So that's about it. That's the current stocks on all of our lists. Nothing really fantastic going on, but that's what we're handed right now. But we'll keep an eye on it all. We're constantly taking off stocks that really break down and adding new ones, and eventually we'll get a really strong market again, and we'll be ready to rock. All right, we'll see you on the next video next weekend. All right, thanks.